Can we ladder this on a spectrum of Cyprus, Greece, Argentina? How bad is this, Tony?
Well, Steve brought up an important point in bringing in the Fed into the debate. Some could look back to 2013 and 14 and think about the taper tantrum when emerging markets assets were hurt by the prospect of the Fed raising interest rates. Back then, markets thought the Fed would eventually raise its policy rate to 5%. These days, markets think the Fed will raise it to about 3%, and it's built into market prices. One can't easily blame this on the Fed, and we think that the Fed will, in fact, ignore what's happening. Think this week that the S&P 500 was very, very close, less than 0.1%, about a 0.5%, excuse me, from its all-time highs. NASDAQ, the same thing. The markets essentially have shrugged it off, and we think the Fed will too, and continue to march up the dot plot.
Peter, any disagreement?
Some disagreement. Look, we have two things, especially in Turkey. We have idiosyncratic problems that are unique to Turkey and its very unique role in Black Sea security issues, because it's so easily influenced by both the United States and Russia, because if you remember, Istanbul literally is the gateway to the east with the Bosporus Channel. There are pipelines that go through the Black Sea into Turkey from Russia. So Turkey is very important geopolitically. So idiosyncratically, it has importance, and we should be concerned about Turkey just from that standpoint. However, we care a lot more about it in the context of a more systemic problem, which is that developed market short rates have risen quite a bit over the past year. So would we really care about Turkey as much? Would the lira be depreciating as rapidly in the absence of higher developed market short rates? Probably not. So separating the idiosyncratic from the systemic, I think, is a really important concept to try to address.
But you think